Afternoon, everybody. Uneducated Economist here. So the Federal Reserve made an announcement that they were going to be getting into corporate debt. Now, this really shouldn't come as a surprise. They said that they were going to do this. It's all part of the new lending facilities that they have out there. It was just a matter of time before they did it. And now, it's not so much the importance that the Federal Reserve said that they were going to be buying into these corporate debts. It's more of the announcement that they said that they were going to be buying into this corporate debt. Because they don't really care about buying into corporate debt. What they really want to do is they want to convince the investors out there that they're going to be buying this corporate debt so that they'll attempt to front run them by lending a bunch of money to these corporations. That's the bigger story behind it, because it's all about credible threats. It's their jawboning. It's the fact that they said that they were going to be doing this by buying these corporate debts that gets the investors to say, hey, I want to buy into that corporate debt before the Federal Reserve does, so when the Federal Reserve starts stepping in, the interest rates will come down and I'll be able to sell those bonds to the Federal Reserve or for profit in general. That's the whole idea, is that they are trying to convince the people to go out there and buy the corporate debt ahead of them. That's the bigger story. And, I got to thinking about this. It's like, even if they made a bunch of rules that says, hey, if we lend you, the corporation, a bunch of money by buying your bonds, you can't use that money to go and buy your own stock. But I got to thinking about this. It was just like, how are they to know whose money is who? I mean, if they were the only lender to the corporation, then maybe they can make up rules about it. But as long as they have the capabilities to sell in bonds to somebody else who they can then do whatever they want with the money, including buy back their own stock, then it doesn't matter if the Federal Reserve lends them money, because they can say, okay, well, we'll use that money for other purposes, but all this other money we'll use to buy our own stock. So yeah, I can foresee this really taking place in a fashion in which both the corporate bonds and the stock market will rally off of this, just simply from the fact that the corporations will then be able to have funding after selling their bonds to all the investors who are trying to front run the Fed. The Federal Reserve is in everything. I mean, you think about it. They're in credit card debt, auto loan debt through all those asset-backed securities. They're in the mutual funds. They're into, government debt, mortgage-backed securities. Think about this right now. We have the lowest interest rates on mortgage-backed securities, and yet low inventory. We should have no inventory. There should be no houses for sale when the interest rates hit rock bottom like this. But yet, houses are having, the area that I am in, there's very low inventory, but the houses that are sitting there have been sitting there for a while, and some of them have reduced prices. And it's because the loans are getting harder to get. Although we have a rise in applications, you got to think about when they are talking about these applications. When did they come from? Through the lockdown, nobody was out checking out houses. Nobody was wanting to apply for, for mortgages. Nobody was taking out building permits. Well, I mean, I'm sure some areas were, but not in my area. They were not taking out building permits, so there was very few of those. And then all of a sudden we had a flood of people come in. Yeah, the percentages would probably look really good on something like that. But the Federal Reserve, they're backstopping everything. And I just noticed today an article, and I'll leave links down in the description for all this stuff. I was reading an article talking about how money market funds right now are sitting at the highest level they have ever been. There's more people have put their money in a money market fund right now than, or at least put more money in, than in any time in history. And if you have the Federal Reserve with a lending facility that says there's no way that those money markets can fail, because they can borrow money from the Federal Reserve through the special purpose vehicles, then why, you're not even taking a chance. It's like, there's almost no risk to it. I mean, there is some risk, but, if you think about it, the Federal Reserve is there to say, hey, no, there will always be money. Here's all the money you need. Just, all you have to do is just sign the bottom line, borrow it, and off it goes. The purchases of those securities start to be made. So if they weren't in the market, think about how much mortgages would be going for right now if it wasn't for the Federal Reserve buying mortgage-backed securities. How many investors out there do you think would just, if they didn't have the Federal Reserve backstopping them, saying that we'll always be a buyer, how many investors do you think out there would be real cool on buying a bunch of mortgage-backed securities right now, and knowing that you are at the end of the line? That if there is no buyers for it because the Federal Reserve ain't there, how confident would you feel holding mortgage-backed securities? But as long as you have the Federal Reserve there, it's good. You can take your chances with it. Anyway, I guess I'll leave it at that. Uneducated Economist. You guys let me know.